Marco, do you take COT reports? I don't know what COT means, brother. For swing analysis. COT is there, that's a terminology in the fundamental and something to do with news. I know that. I don't remember what it is though. If you want to let me know. Um, cool. First thing we'll speak about before we get into charts. Connor said he was down 5%, got his account back to break even. Now he's down minus 3%. Um, and then he said he's over trading. He needs to snap out of it. Over trading, if we mentioned previously, is um, a killer for a lot of people. Um, the thing about over trading is if you don't know how to become a good loser, if you don't know how to take a loss on the charts and walk away, then the numbers game that we're trying to play here will never work out, right? If you're able to take some wins for a short amount of time, go on a decent winning streak, not even a winning streak, just you're reaching profitability over a short amount of time, and then one bad day comes when you blow up and you overtrade, you over risk, you basically just backtracked 10 steps, right? Then all that work you just put in for a week or two, following your plan, staying consistent, managing your risk, all goes out the window just because of one blow up day, right? That's all it takes sometimes is one blow up day. Um, so you gotta ask yourself, like the people that always struggle with the over trading and the over risking, it's essentially to not put it really in much of a polite way is you just have a lack of disrespect for yourself, right? And you don't have that long term vision in check. If you understand, if you could become 1% better every day, it will tenfold down the road. You don't need to have those home run kind of days. So a lot of people they'll show up to the charts and they want to take trades where they're making 5, 6, 7 R every single day. And the reality of that is it's just impossible, and that will not happen. Don't get me wrong, there will be days that you do have phenomenal trading days where you'll make 5, 6 R. Those won't come all the time, and that is just the reality of trading. People on social media, people online that say they do, is just a bunch of horse shit. Okay, that shit will not come, especially when you start trading some decent size accounts. Sure, if you're trading like $1,000 account, you can make 5, 6 R because there's not a lot of emotions that are going to be involved with trading a small account like that, right? But when you start tapping into the bigger accounts, making 5, 6, 7 R on these accounts is not something you'll be doing every single day. Don't get me wrong. Like I said, there will be days where you have some beautiful days, but you take those, walk away, and you move on to the next day. Um, but when it comes to over trading, guys, like it's a lot of people's downfall. It really is. And I've been doing this teaching thing for a bit now to understand where most people struggle with. And it always, most of the time, it comes down to people that or they're just over trading. Um, you really got to ask yourself, like, do you want to make it in an industry like this? And if you do, you have to be willing to do the things most people don't. Okay. And if I'm sitting here right now telling you that most people's downfall is over trading, what do you have to do? The easy answer is that there's no sugarcoating. The easy answer is don't fucking overtrade. Okay, overtrading will do nothing for you. Ask yourself this: if you are trading and you start taking a loss or two, and now your trading day should be done, but you still want to trade, what you're doing is you're not breaking your rules. And if even if you take a W and you broke your rule, that's not an actual W. That's a loss. It should be a loss mentally because I'm sure maybe some of you guys have been there, but maybe there is times you break your rules, break your plan, and you take a trade and it's a win, but it doesn't feel right. You know what I mean? Like you took the win, you walk up from the charts, you're like, that wasn't actually a good trading day. And maybe subconsciously you know that, but then you walk away kind of happy for a little bit, but you know deep down that wasn't professional trading. That wasn't something you should have done, right? Something I do for myself, and that's helped me in the past is there was even a day this week that I kind of encountered this where I felt a little bit of emotion creeping in. Soon as you feel that cloudiness, that emotion, that like, oh, I gotta make that back. Shut that shit down. Shut the chart down. Because I promise you, as soon as emotion starts coming into your mind and clouding your vision, there'll be no proper in professional trading going forward. They'll never be. You want to have the most I don't give a fuck mindset when you show up to the charts every single day. And if you can't show up to the charts with I don't care what happens, I follow my plan, I follow my rules. I know that it works for a long period of time. If you don't come into the charts with that mentality, I promise you guys there'll be no sort of profitability or consistency. Don't get me wrong, maybe you'll pass some challenges, reach a payout or two, but there's no longevity. Okay? If you want to make it in an industry like this, you got to be fucking cutthroat. You literally got to be a savage. You got to do the things most people don't do. Okay? So those common mistakes of over trading, those common mistakes of over risking, the common mistakes of getting those home run trades, get that shit out of there. Like you can't be doing that. Um, Small wins compounded over a long period of time is what you want to be doing. So think about it like this. If you even for myself, if I show up to the charts and like sometimes I win a trade, it's like 600-700 bucks. You got to think about it. 600-700 bucks is still genuinely pretty crazy for pushing a couple buttons. But let's say I have like 3 days of 600-700 bucks. That's 2,100 for the week. Okay, 2,100 times four. I'm looking at 8 grand in a month. Sure, sometimes in my vision, I close the day off and it's only. No, I don't want to say only because sometimes even for some people that's a lot of money, but it's 700 bucks. I'm like, fuck. I go on social media, I'm scrolling. Someone made 7 grand. Right? There's always going to be someone that's making more or doing a little bit better than you, which is fine. Just use that shit as motivation, but you can only compare yourself to yourself, period. If you start looking at other people's profits and stuff, you'll start doing and trading very toxic. You'll up your risk, you'll take more trades. Long story short, don't compare yourself to anybody. Compare yourself to who you were yesterday, and that's all you can do, right? But going back to what I was talking about on focusing on those small wins, they go a long way. So, like I said, I was talking about if I make 700 bucks one day, it might not be a whole lot of money to some other people in the space, but 700 bucks made 3 times in a week. I'm looking at again around two grand, 2 grand that week times four over the month. I'm looking at about roughly 8 grand, 8 grand extra on top of other streams of income you have. Think about how far that can go. Now think about it like this. Also, let's say you make $200 in a trade in a single day, 3 times in a week, $600 profit during the week, times four, 6, 12, $2,400 extra over the course of a month. Think about how far $2,400 extra can take you, right? And that's just the beginning. If you can realistically, if you learn how to make $200 in a trade down the road with experience, you'll be able to make $2,000 in a trade. And that's just how this shit works. Okay? It's all perspective. The only thing you're lacking is experience. Experience will aid you in making more money down the road, period. Okay? Like I said, if you know how to make $200 in a trade right now, it's only right that down the road you'll be able to make $2,000 in a trade. Okay, and that's just how this shit works. Again, the only thing you guys don't have is that experience. And if I could give you it, I would, but I can't. That just comes down to you guys showing up every single day, putting the reps in, putting the time in. Eventually, you will get to that point. Well, you will see these numbers. It's inevitable. Okay, again, there's only so much I can do, right? I provide you guys the keys to seeking profitability and doing well. But at the end of the day, if you guys don't put the time in, if you don't get those reps in, if you guys don't experience those L's mentally, then you'll never find profitability and consistency, right? Because a big thing, obviously, as we know, psychology is massive when it comes to trading. So in order for you to figure out what your strengths and weaknesses are, you have to put blood, sweat, and tears into the charts, right? You're gonna have to see those shitty days, and then of course you'll see some good days. But you have to experience those shitty ones because those shitty ones is where those lessons come. That's when you really experience and figure out, okay, I'm a little bit greedy, or I lack patience, or I lack discipline. That's when you'll figure out what kind of trader you are. Identify those weaknesses, okay, and focus on strengthening them and turning those weaknesses into strengths. Okay. But again, the only way you could do that is if you actually put the time and work in. All right. A little bit of a rant, but I hope you guys can see all these. You have to understand also, I've been through all of this shit. Like I have seen all the shitty times. I've seen all the good times. I know what works, what doesn't. on the charts and mentally as well. Um, something again, and I can relate to what Connor said at the beginning of this webinar. I can relate to the overtrading side of things because 2 years ago there was times where, and I tweeted this out this week that I had like I called it short term or yeah short term profitability, meaning I would pass challenges, I would reach payouts, but the thing is I would never hold on to a funded account for like months, right? I hold on to that funded account for 2 months maybe at the most, and then blow that shit because I'd have one bad day of trading, and then I'd blow up, blow the accounts, and then start over again from square one, from square one. Yeah. Um, but yeah, I've encountered all this. The goal is, guys. Sure, you want to pass challenges, you want to have consistency, 100%. But once you reach those funded accounts, the goal is not to just get a payout, but it's to hold those accounts for a long period of time. Because what it is if you can hold those accounts for 2, 3, 4, 5, 6 months, then you prove to yourself that like you're in control of your mind. Okay, you're in control of your emotions. This is what you want to be as a trader, right? If you want to be a professional fucking trader, then you got to be able to hold these accounts over a long period of time, not just some reach one payout, blow it up, and start again. Like that's just gambling, right? Marco, could you show us how you would reason on Nasdaq on Friday, even the whole week? Obviously after the speech, the speech. Don't kill me. But yeah, we'll go over all that shit soon. Elijah says literally something I went through for a long time. Yeah, and it's these are things that like it's almost inevitable to go through and it's almost necessary because you'll realize that like when you start reaching payouts, that's when you're like, okay, this shit's real, right? You're making money from it. What comes with that though is you'll start experiencing new emotion, new things, new problems. You'll encounter new things. So like it again, this is all inevitable. It's almost necessary to go through all these things because you'll learn from them. And that's what it is. You fuck up and you learn. The problem is a lot of people will fuck up and they'll keep fucking up over and over with that same mistake. So don't make that same mistake over and over and over and over and over and over. Okay, that shit won't fix itself. You have to be able to fix it. So if you make a mistake, identify why you made that fucking mistake and fix it right then and there. Okay, don't go in this cycle of thinking, okay, it's the charts that are wrong. No, it's not the charts. It's your mental. It's your mindset. The charts are never wrong. Okay, the charts do whatever the fuck they want to do. Of course, we have a system built around the charts, but and we know it works over a long period of time. But if your mental and your mindset isn't in check, you will get fucking humbled. You will get killed. Ain't no one coming to saving you in this life for trading. It's such a fact. The overconfidence is real once you start making money too. Staying humble, having that long-term vision. Yeah, 100%. You got to be able to have that same mindset on a daily basis, that same vision on a daily basis, because it does not matter what happened yesterday. Every day is a new day. And I'll give you an example from my journey. And I think I've spoken about this a couple times, but I had this 1 month, and to this day, it's still my biggest trading month ever. At the time, I was kind of hunting bigger payouts, so that's why it was such a big month. Um, and the thing is, I had that big month, and then I chased that big month every single time, and it's the wrong mindset. It's the wrong vision. You have to be able to show up to the charts every single day with that clear mindset and vision of it does not matter what happened yesterday. Yesterday is yesterday. Today is today. Okay, I could have had the worst train day ever yesterday or the best train day ever yesterday. It does not matter. Don't let yesterday influence your decision making for today, or not even yesterday, but last week or last month. Okay, focus on today, and that's it. That's the clearest way of trading. Staying humble and having a long term vision is a must. It really is a must, Elijah. I know exactly where you can definitely relate to this as well. So, um, okay, cool. Let's hop into some charts. Um, but man, Euro has been on a mission. So we'll get to Euro in a second. Let's talk about what were you guys looking at, honestly, because I haven't really been in tune with the Forex market lately. As you guys know, I'm trading futures right now, so I'm just up to date in the indices side of things. So, what pairs were you guys looking at this week? Gold buys on Friday. We'll talk about that. Have you read Tom's Best Loser Wins? Honestly, man, and I'm gonna be completely transparent. I have never read a trading book, but I'm not gonna say um well, I'm gonna say this. I think I should. There's definitely some books out there that I should read. The problem is, I fucking hate reading, and that's just how I am. But that doesn't mean I can't like get an audiobook or something. So I haven't, but there is definitely a lot of trading books that I should listen to, and I'm going to listen to. Gold buys Friday. Gold was absolute clean this week. Gold looked good this week. And we'll cover some opportunities for sure. Get this thing going. Okay, cool. So let's just discuss how gold has been moving this week and why, at least. All right. So identifying liquidity is always what we want to be doing. All right. So let's discuss this move right here and why this occurred. All right. So this was, I don't, was this week? Yes, it was this week on Tuesday, I believe. This low, respecting lows to the left-hand side. All right. I just grabbed this low here. So we respect that, move away, come back down, even respect support again, and move away. Okay. These are not trades we're getting into. Okay. Obviously, why? We're just respecting liquidity. So don't get me wrong, price goes bullish, but and how to run it, you love it afterwards. Yeah, 100%. Um, we have simply just respected liquidity. So this move from A to B is not moves we want to be involved in. Okay, as we know, and I'm sure if you're new here, you're starting to notice this, but we allow liquidity to get built in the market and we react accordingly afterwards. So this price action essentially from basically from here to here is not trading price action for us. Okay, this is all like the market just building liquidity. Okay, so what we can see is again we're respecting this low on the left hand side. Okay, once here, twice here, and then we go bullish. Okay, and we have another BOS to the upside for retail. Okay, so let's type this in here. Retail is going to see this as a BOS in the market. Okay, what is the intention behind this? It's to induce buyers. Okay, so look what happens here as well. The market comes down, gives a reaction here, okay, and actually goes bullish. This is just screaming sells for me, okay? Why? The market is going bullish when we have liquidity to the downside. So we understand that this move right here should be false. And if we go into the lower time frames, what can we see? This looks good. Wow. Well, actually, yes and no. And we'll talk about why. So again, like as we know, we have liquidity to the downside here. If we want to buy this asset, if we want to buy gold, you need to be buying below liquidity, of course, right? So essentially, you mark this low out and say, actually, let's just leave this on. You mark this low out and say, if we trade below these lows, then there'll be a buying opportunity. But if we don't, if we just come back down over here and go long, there's no buy opportunity. And it is what it is. That means we weren't meant to be in the trade per our system. Okay, so again, keep it as simple as possible. If we want to buy, we're buying below this low. Why? Because that's where we are building liquidity. Okay, not just below these lows. Okay, a lot of people will be like, let's just get these lows ran and go and buy there. No, look to the left hand side. Okay, be more precise with things. We understand that liquidity is being built right here. Okay, so grab that low and wait for that low to get ran. Period. If it doesn't get ran, then we're not buying this asset. Simple as that. We can see on as for this sell opportunity here, why did this sell end up occurring? So the market comes down, and I mean, look on the M1 here. We can remove this red box and just see. Look at this price action we got right here. This is just liquidity. Why? Very simple. Look, that's all that is. It's just structured liquidity, right? So there's liquidity here. There's liquidity here, period. Right? On a lower time frame. Of course, we want price more to the downside, but on a lower time frame perspective, that's all this price action is right here. Is just internal liquidity, and it's just structural. Okay, again, you can look at it as a break of structure, return to an order block, and trades away. So like smart money or Fibonacci, or you could say this is trendline liquidity, channel, whatever it is. All we know is keep it as simple as possible. This is fucking liquidity, period. Prices come back down to this low, moved away, come back down to the low, moved away. There's liquidity below this low, period. Okay? We have that knowledge that there's liquidity there, which means we can anticipate price to run to it. Cool. So we're approaching New York Open here. What happens is price comes down to these lows. Look how we respect the lows, move away. All we've now done is now built a little more liquidity here. So now all we need to see is price take out some sort of highs and then we can sell this thing back down. And that's exactly what happens here. Look at this. We get price back to the upside. So look how we get this BOS in the market here for retail. Price sells off. Look, takes out this low, induces sellers. Where does it sell off from? Why did this sell off occur? Boom. Right from this area. Okay, this POI for retail. Why was this an area retail selling from? Simple stuff. Look, they're going to be looking at this as like a pattern. BOS to the downside. They want to sell here. This is a POI for them. So the market gives a reaction for them, sells off, takes out a low. Why is that important again? They look at this as being a reaction to the downside. We've taken out a low, so they're going to be selling again from here. Okay, and as we can see, sellers get trapped here, and of course up here. Now that the buildup of liquidities happen and we've trapped the sellers, okay, we tap into this isn't the cleanest form of a liquidity block, but you can argue and say there is a little bit of a liquidity block here. Okay, we tap into this area and run away. Okay, now for entries, I'm going to be honest, this isn't the cleanest liquidity block. You can argue and say it is. You can use it. Yeah, there's one above. Um, but for this call, I'll just come out and say this isn't really the cleanest liquidity block to use. However, I do see another entry here. Okay. I'm going to leave the chart like this, and I'm going to pick on somebody. Let's use Preet. Where would you see another confirmation-based entry? Perfect. And there was actually one more as well. Where do you see another one? Preet, Preet. Do you see the other one? Not so much. You're kind of getting a little forced with it. So the first one I see, okay, we always want to identify a liquidity block. Okay, so I can see here, look how price was kind of sluggish here in this PA. Okay, and then we got a bullish push up to run internal and then moved away. Okay, why is that of interest to me? Because now we've just created a liquidity block. Okay, and if we build liquidity below this liquidity block, it's going to be an area that we can take an entry off of. So I can see right here, we build liquidity here. This PA, and maybe you can argue and say it's not too clean because on M1 it's kind of squeezed up. But if I was to open this up on a lower time frame, all this is this. Okay, this PA is right here. That's it. Okay, there was a BOS to downside, price came back up. Look, BOS to downside, price came back up to the high, respected it, came back down, left equals, respect the low again here, and moved away. So this PA right here is literally just built liquidity. And coincidence, right above, we have a liquidity block. So what I would do is I'd mark that liquidity high right here and wait for price to trade above it and take the sell. And then there is a second one as well that pre-marked out. So we can mark out this one here. Low taken, inducing sellers. Okay. And then we've come up, respected the high once, twice, moved away. So you can drag it over. Again, you got a liquidity block right above. So this could be sell number one for you. Above the liquidity block. Open up a little bit. And how do we manage this trade? Okay. Just to this internal liquidity point that we identified as liquidity. Again, look how simple this shit can be sometimes, guys. This is literally just structural. That's it. That's all it is. And look how we've respected it and moved away. Just logically, it does not make any sense. This move right here is just false. Period. Okay. So we just literally built liquidity. So what you can do is you can target that and use that as a partial point or a full target, however your trade system is. If you're happy with a 1 to 3.6, that's fine. If you want a partial there and hold to your target down here, you can do that as well. Boom. Gorgeous sell. Sorry, boys. I'm getting some dry mouth over here from yelling. Any questions on this? On the setup? If you guys aren't clear, please speak now. This is what these webinars are for. Clear? Nice one. But yeah, good stuff. Clean. And then of course you have another great entry here. Low taken. high taken and liquidity block above, right? We're just building liquidity down here at this low as well. It's all price is doing. Every reaction at this low is basically just false. And again, you just want to continuously look for some sort of liquidity point to get ran. So right here we have sellers getting trapped with a liquidity block above. If you wanted to wait for this entry too, to be honest, you probably cleaner than the other one we drew to begin with. Boom, 1 to 3 down to this internal liquidity point here. You have another low down here that you can target as well. That's fine, relative equals, which is a 1 to 6, and then the full target once this low is taken, you got to be more than happy with that trade, right? Same. So like this is what I want you guys to understand. Like this is the same thing here. Look what price has done. We've traded low, okay, into these lows over here, respected them and moved away. It just that does not make any sense because think about it like this. If you're watching this PA live and you see that we've come down here, oops, we've come down here, respected like literally nothing. Like what have we done? We've taken out like this or something and tapped into this wick. Like it doesn't make any sense. All we've done is respected lows. Okay? We basically built liquidity here. And then we go long. And in your head, you're like, okay, this is not a move I'm going to be involved in. Why? It's just engineered liquidity for retail. So you understand that this move is going to be false. So now we understand liquidity is being built. Okay, this move from A to B is just false. It's just to build liquidity. Same with this. Look, we've identified liquidity and prices respected it. So that's just going to be a false move to the upside. See what I mean? Same shit. Perfect. So there's your sell there. This is clean. And then if I'm gonna remove these drawings now. Cool. Go back to the 15. So we have had this sell off. That's the sell we just identified on Wednesday in New York. So sell off to the downside, run that liquidity. How can we get involved in this? There has to be a liquidity block below. There's your liquidity block below. Okay. Or you wait for some sort of confirmation based entry in here. Okay. Look at the 15 kind of provided us. If you guys have watched previous content, you guys would understand that this happens a lot, right? Look how 15-minute runs the previous one. Okay. Taking out the liquidity from the left-hand side, tapping into this liquidity block from the left. Okay. And then look how we build a 15-minute low, aka liquidity. Run that anywhere below this blue line here is a buy. Oops. And this is again just a simple way of entering sometimes. Okay, you have identified a liquidity block. You need another liquidity built above it in order to take it because that's where you're going to be taking the buy off of with your stop always below the liquidity block. And you just hold that shit back up to the highs. Just like that. Okay, so that was a way of taking it. Another way is as soon as that liquidity was taken to the left-hand side, let's see if we can get a 1 to 3 back to the high with using the liquidity block from the left. So we can't. If we were to take that buy as soon as the low is taken with our stop below, remember, always below the liquidity block, we can't get that 1 to 3. So per my plan, per my rules, I don't really take any trades less than 1 to 3. So I'd have to wait for it to come a little bit deeper, and you could. You could get it. You could get it here. All right. You can see also it kind of taps into the whole liquidity block like this. Boom. Okay, so you can wait for that top. The reason why you're waiting for the top is again you have to allow price to get a little bit deeper in order for the RR to make sense. If the RR made sense up here, that's fine. You take the trade as soon as the liquidity is taken, and then your entry is supported by the liquidity block. All right. And again, extreme was valid, and also you have a confirmation one here on the 15. Let's see what the lower time frames look like if there was anything else. So the 5 looked like this. Nothing too clean on the 5. The 15 looked way cleaner to be honest with you. And the 1, nothing too clean to be honest. So if you saw it on the 15, take it on the 15. That's fine. As for the other time frames, there wasn't really anything too clean to be honest with you. And then anything on the way back up, Nothing I like. Kind of taking out highs, coming back, going long, taking out highs, coming back, going long. So nothing I really want to be involving myself in. But as for targets, great targets on the way up. Look, we left liquidity to the upside here. And then also you can see all this liquidity to the left-hand side as well. Okay, so many targets. You can target this high, and then you can target the structural high. Cool. Good stuff. So that was that move. There was an opportunity to sell this thing down to the liquidity, and there was also an opportunity to buy this thing back up. So clean stuff on gold that day. Coincidence. Look at this. We induce sellers. We trap them. Okay. And then look at this. Since we've taken out this high, retail sees this as BOS in the market. Okay. So where are they going to buy from? They're going to buy from over here. And would you look at that? They get trapped again. Buyers trapped, which allows the price to go bullish. Okay. And I actually really did enjoy this move or this entry. This would have been a great limit entry. One of the examples of good limit entry. So again, since we've taken out this high over here, retail is going to be buying from this red box. We understand that. We wait for them to get trapped. They got trapped. Cool. Look what happens. This PA right here. Don't overcomplicate anything. Okay, just like we were talking about previously on gold. All this is structural liquidity. Boom. Okay. So we take out the liquidity from the left-hand side. We build liquidity here. Boom. Why is this valid to take as soon as this low's taken out? Liquidity block right below. That's it. Take this buy. And why can we take it? We have literally just built liquidity at the highs for us to target. Okay. And again, we're not just taking the buy just based off this. We have logic. We have a reasoning to trade higher. Okay. And there's another 1 to 3 of the highs. As simple as that. That's it. Okay. That long was in Asia, so I didn't take it. That's fine. That's fine. That's why I said this is just a higher time frame entry. If I ever take entries like this, when I was taking entries like this in FX, um, this is just a limit entry. That's it. Because if this happened on the 1 minute time frame, you guys would be taking this, right? If this happened on the 5 minute, you guys would be taking this. Just because this entry came on like the 15:30, and it would took a little bit longer to play out, that's why you didn't, right? But logically, it makes complete sense. Limit entry below these lows, target the highs. That's fine. Why don't you guys do analysis more often to share in the group? Ask yourself why. All that does, and I've noticed, sometimes I will. The reason why I don't do it much anymore is it just causes confusion, right? You've joined this group to find profitability yourself, right? To be consistent by yourself. So why do I need to show you guys my bias, show you guys my direction, right? You have to also understand that I'm not always going to be correct. So let's say I provided you guys an analysis. I served you guys an analysis and I was wrong, but you guys were right in the first place, right? So then all that's going to do is cause confusion. Then you're like, fuck, I should have just listened to myself instead of looking at Marco's chart, right? So sometimes I will provide a forecast analysis if it's very straightforward and if it's a forecast that you guys should be able to identify as well. But like I said, there's been times in the past where I put a lot of forecasts out. I've been wrong. Other people have been right, and it just causes confusion. And then maybe it'll just slow down you guys finding progress yourself, right? Like that's like it's almost the same thing as me doing signals, and we kind of did some of that in the past. It's just a mess, right? You have to understand. Again, you're in this group to be able to be consistent and profitable on your own. Period. Okay. Self-reliance is the best thing for everybody, 100%. You can almost see it play out in front of you. As soon as it reacts in the high, we already have the block at the bottom. Limit order on this can make complete sense. 100%. 100%. So great buy entry down here, targeting liquidity back at the highs. Again, you need to make sure we're targeting something, right? If these highs weren't built, if liquidity wasn't built the other way, then there's no point to take this, all right? And if you want to take a confirmation, this was in Asia, so I mean, not a lot of people are monitoring charts in Asia, but look, low taken, or sorry, high taken, low taken. This was a confirmation entry right here. Again, of course, this is in Asia, so this is just strictly for technicals, but there's a confirmation one right there.
No, I know. I'm not saying signals, brother, but I kind of related it to in the same sense, right? Um, giving you guys my analysis on a daily basis, my bias on a daily basis, doesn't really do much for you. Okay, and I again, I know this from experience. It's not hard for me to mark up a chart and send it in the group. I could do that every single day, but I understand that it only causes confusion, um, and doesn't benefit a lot of people. There was a buy entry in Thursday New York session 2, but didn't reach the target. Yeah, we'll take a look at it. So London ends up taking the high. Looks like price got a little bit wicky here. Let's take a look. Look at this. So we build this liquidity block in Asia, right? And we end up, it's pretty clean. New York comes around. We have a little bit of news. Look how we spike the highs to induce buyers, trap anybody buying above that low, and we hunt right for a liquidity block. Where can we target? Look at this. So news, again, went long, taking out these highs here, respecting these highs to the left-hand side. That is a phenomenal target. Okay. And because this move happens so fast, you can definitely partial on the way up. Like you don't have to get too greedy, right? Like once we start running some internal points up here or even up here, if you want to take a little bit off, there's a bunch of different opportunities. Would these entries on gold be Da Vinci? This is definitely a Da Vinci setup, 100%. 100%. You took this, beautiful fucking trade. This is so, these are my favorite entries, as most of you guys know now. Trading is a single player game. Nobody else pressing the button at the end of the day. 100% Elijah. And this is something I talked about in a live call a couple weeks ago. If I literally turned on my charts every single day and traded live in front of you guys, it's not a bad thing because it can actually benefit some of you, especially in the psychology side of things. But if I literally told you guys where to buy and sell and put stop losses and targets every single day, I promise you, most of you guys won't even see the profitability I see. Okay? And that's just how trading is. If I literally serve trades to you on a platter, my entries, my stop losses, my targets, you guys will still find a way. Not all of you guys, but people will still find a way to fuck things up. Why? Psychology. Period. That's how trading is. Cool. Clean ass buy. Clean. Okay, this is what you want to see. Induce buyers. We trap them. How can we take the entry? We need a liquidity block below. Here's your liquidity block. Okay. Preet says Friday sell. Let's take a look. God damn, this is intricate as hell. Let's take a look on my side. Um, oh, this was up here. Was this up here, Preet? Yeah, cool. Let's take a look. So go back to the 1 hour, figure out what price is doing here. So cool. Where has the buildup of liquidity been? Okay, as we know, this whole move in on Friday morning, early New York, we built liquidity at this high. Okay, and we have look, we have right above. We have a liquidity block right above. Okay, so we're building liquidity right below a liquidity block. Okay, oh wow, we actually even ran that. We actually didn't run this in futures. That's why this caught me off guard. But we trap the structural high here, which is fine. Trap that. Now we have liquidity down at the lows, which is probably something we're probably going to be running for. I don't know if there was an entry at the extreme here. No, no entry at the extreme, but pre marked out an entry over here at the lows, which I believe I do see. Yeah. So, and gold has done a lot of trapping this week, which is nice to see, right? Because look, again, trap the buyers here. There's a buy back up. Okay, since we've taken out this low here, seller liquidity above this high, we take out this high, which fuels us for a move back down. So it's just continuously just trapping buyers and sellers. One second, let me read these. Missed Thursday YM short. Okay, are liquidity blocks formed in previous days higher probable than liquidity blocks formed during the trading session? No. And that is just a straightforward answer. Yes, Marco, I already have experience. I don't want a signal room. I ask for ideas, but I understand that people without thinking enter just because of the confidence of your analysis. I understand perfectly. Maybe I was wrong to put myself in the chat. What is Marco send nudes, not signals? This fucking guy. What is COT, Dan? What's caught? COT. Anybody know you keep saying that, but you haven't answered what COT is. I don't know what that is. Um, yeah, I don't know what that is. So we trap sellers, fuels us for a move back down. If you look to the downside, we have a shit ton of liquidity to the downside, which most likely is something we're going to be targeting. So BOS to upside, retail going to be buying this asset down at the lows. We understand that. Look how the market traps sellers, or sorry, induces sellers, traps them. Okay, building a liquidity block. Now we want to see liquidity built. And this PA right here, if I want to mark this up, you can see we had a BOS to downside. The market has come back up, traded into this high, sold off again, inducing sellers once more by taking out this low, but still respecting this low to the, or this low down here, which means why is this respecting the low? BOS to the upside here. This is where buyers are buying from. So they get the false reaction up, runs inducement high. You have a liquidity block above. Take the entry above this high. Or if you want to wait for a candle closure, here's a 1 minute candle closure. You can take that. Again, stop above the liquidity block still. And you target the low, for example, right here. Boom. This trade was my biggest win lately. Good stuff, brother. I like that. Commitment of traders data. I have no idea what that is. Stuff with fundamentals. Oh, okay. That's why I don't know what it is. But yeah, clean sell. Gold has literally just done trap, 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 right? Induces buyers, traps them. Induces sellers, traps them. That's it. That's all the market's doing right now for gold. Now we got, again, liquidity to the downside, so keep an eye on this. Most likely maybe run back down to the lows. We see. We see. Okay. Gold has been a wild one. Lots of opportunity on gold throughout the weeks, which is nice to see. However, this pair right here, man, wow. And we were talking about this at the beginning of the webinar, but look at this weekly candle we got. 520 pips on this weekly candle. Okay. I'm going to say this now, and I've talked to some people before. I believe we will run for these highs on the monthly time frame. So another 450 pips to the upside. Erection candle. It really is, bro. What a crazy. Don't be surprised, guys, if we have a more consolidating kind of week, right? We're now trading at this high. Okay, remember this is the weekly time frame right now. We're now trading at this high. Don't be surprised if we build liquidity at this high now. Okay. We've just had one, two, three full bullish days, and then 4 and 5 still continuing up basically. So if you are looking to trade euro, just you're gonna have to wait a bit. Okay, allow price to settle down, find some sort of top, build liquidity again. Okay. Look how we've taken out daily high here. Maybe price is gonna run back down to the daily low now, and then maybe come up, respect the highs, build liquidity, another sell off. Who knows? Okay, and then maybe it goes long. All I know now is we need liquidity to build again. Okay, we trade liquidity concepts. If there's no liquidity on our chart, if I go onto the 1 hour and 4 hour, there is no liquidity in front of my eyes right now. All I see right now is this. We've taken out a high and we have an imbalance down here. That's all I can see. So we need liquidity to build again. Once liquidity builds in the market, then we're going to be able to build a bias and find a direction again. Okay. But if you are looking to trade this asset, please wait for now. Okay. I remember some of you guys, and man, it was hurting my eyeballs. You guys were looking for entries on friggin' Euro yesterday in this PA or something. And don't get me wrong, there's always going to be, not always, but most of the time, with the benefit of hindsight, you're always going to be able to find an entry. Literally, always. Um, so the thing is, you have to position yourself in a way where you're trading the asset in a high probability condition where it makes the most sense to trade it. Look, we've just been flying bullish. You buying right now is just going to be FOMO buying, and you selling is just going to be you trying to catch a top. And we're not in the business to do either of those. Okay, so position yourself to trade in high probability conditions. Euro right now is not that. Dan, you are sending me another language. I don't know what any of that stuff means. I don't use any of that, to be honest with you. If you use it, that's completely fine, but I just don't know. I don't I don't use any of that. I took a sell Thursday London, which played out 5R, but looking back was still a stupid trade. I'm glad you identified that. Did you take it? Oh, you here. Was it over here? No. Thursday London. Up here? Yeah. It's just it's a scalp, it's an intraday play, it's an intra-session play. It's not wrong. However, not the cleanest trade of all trades, but again, there's going to be a bunch of times with the benefit of hindsight as well, they're going to be able to find opportunity left, right, and center. Did you take the entry here? I'm not even sure where you took it. London Open. Did you use this liquidity block? Thanks. Okay, cool, Dan. Makes sense. Connor, would you take it? If you want to, do you have annotations? Can you draw it on my chart right here? That's fine. Like I said, up here. Yeah, I see what you mean. Um, again, you're on the M1 trading a short, and I'm glad you identified this, but you're looking for a short, and look where PA is, bro. That is like, that's so scary. Rather than just waiting for price to build again, because look, now you can see on the 1 hour, what have we done? Open it up a little bit more. But we've built liquidity at this low. Okay. Since we have built liquidity at this low, it makes sense for us to short here. Okay. Now, don't just immediately start hunting shorts up here at the extreme. What you can do is if price goes short right now, okay, maybe we have something like this happen. Perfect. Then we come down to the lows and we're trading right here. Okay. What happens sometimes is, and we just discussed this on gold, we identified liquidity at the lows. If price now respects the lows like this and moves up, takes out these highs, trap sellers. How we trap sellers? They've they've been induced because we've taken out this low. They're selling this high right here. Okay, we trap them. What do we have right above? Liquidity block. You could take the sell here and target here. Yeah, just old habits. That's fine, bro. And I'm glad that you identified, even though it played out, the conditions that you were looking for the sell was not the best conditions, right? Which is fine. I'm glad you identified that. Just old habits trying to catch reversals. We'll snap out of it eventually. 100% you will. But again, the important part is you identified that. But this right here would be a better sell to take, right? A Da Vinci sell. We've identified price to the downside. Okay, we've identified liquidity that we can be targeting for sells. Then what happens is we respect the low. And we get that false bullish move, grabbing internal liquidity, liquidity block above, smash this sell. Or you wait for in here, in this price action, you wait for this to occur. Same thing, right? And you take that sell above that high and you ride that thing back down to liquidity. Cool. All right, guys. I'm getting major dry mouth over here. I'm yelling at my screen. Any questions? All good? Nice one, boys. All right. You're angry because you're back in the snow. I am not. Well, okay, maybe I'm a little bit angry because I'm in the snow. Um, but yeah, I'm back in the cold, unfortunately. But it's always good to be home, man. Like at the end of the day, I do love being home. I don't get me. I do always work and grind when I'm away, like on when I'm in Florida as well. But yeah, nothing beats Florida weather. But all good. We're back at home, back to the full grind, and that's it. Listen, I hope you guys have a good rest of your weekend. I'll get this webinar uploaded immediately. Uh, Honestly, bro, I won't right now. We've already been on call for an hour. What I can do is here, I can discuss what I think on Nasdaq currently. I look at the futures chart though, so hopefully that is fine with you. So I actually came down to where I wanted price to come down to, which was right here. Okay. Now call me crazy, call me crazy, but I believe this thing can move all the way back up to the upside. All right. Why? This was all a build up. This price action right here was literally all a build up. Okay. And we have left relative equals up here with a big sell off to the downside. And me looking at this market right now, people are going to see this and think this thing's fucking bearish, right? Like, think about it like this: BOS to the downside, massive sell off in the last 2 weeks. A lot of retail people are are bearish on this pair right now. Um, these equals look good, man. They really look good. And I hope they're good because I'm on buys in crypto and I'm pretty sure if this thing goes up, crypto goes up. So that'll make me a happy person. And we have just grabbed the last kind of point of liquidity for myself, meaning, or actually not yet. It looks like we could run a little bit lower, maybe. I'm not gonna completely want it down to this low, but don't leave this low off the cards. Okay, but we've been building lots of liquidity for a while. Look at this, right? And since this sell-off has occurred, like we had all liquidity here, we had liquidity here, and then of course this price action right here, again, don't overcomplicate it, is literally just structure, boys. Price comes up, comes down, does this. This is all structure liquidity here. Okay, and we're starting to hunt for all that. And then we have big imbalances below. So, hey, I believe we can see some bullish move. I'm not going to go ahead and say I'm not in the mood. Sorry, I'm not in the market to predict massive moves like this, but I am going to be starting to look for buys back up for sure. Per Paraculo? I don't know what that means. I don't know what that means. But yeah, I'm going to be looking for buys on this pair eventually, longer term at least. But we'll wait and see. This was a pretty clean sell in on Friday in New York. Takes out the high, creates a liquidity block, and price sells off, trades at the low. Look at the liquidity we have down here. Trades at the low, moves away, runs internal, respects liquidity block. So right here could have been a sell opportunity as well. This was in on Friday. Take that like this. Again, stop always above the liquidity block, and we're targeting liquidity in the opposite direction. Boom. In and out. That reaction to the low is key, man. 100%. No, I didn't take this. I did not take this. But yes, great point, Luke. Building that liquidity at the lows. And look what we've done at the lows. And it's not a coincidence. This PA right here, oops, is literally just, look, that's all it is. We've literally left structural liquidity here. And we run structural liquidity in the opposite side, sell off. That's it. That is it. Cool. All right, boys. We're going to wrap up here. That was a solid call. I'm going to be honest. I enjoyed that. I hope you guys have a good rest of your weekend. Thanks, bro. Of course, guys. No worries. Hope you guys have a good weekend. And I'll see you back in the cord on Monday for a new week. Fresh week. All right, guys. We'll talk in a bit. Take it easy. Thanks again, Sensei. No worries, brother. We'll talk. See you guys.